A lot of that story has to do with who's exempt and maybe who's not. So our Arjun Karpal is starting by with more on the trade. And Arjun, the tech sector is a key focus, but the chip stocks especially. What exactly do we now know and not know about who's exempt and who is not?
Good morning to you, Dom. And that's a great question. There's a lot to unpack here. What we know is that President Trump has said that companies committed to build in the U.S. won't have that tariff charge. What we don't know is the following. Will the tariffs apply to the raw chip itself or the end product, like the phone or the laptop that's the chip is inside? How much investment will firms need in the U.S. to avoid the tariffs? And how much of the product actually needs to be made in the U.S. given the global supply chain? These are just a few of the questions. Now, if we break down the major companies involved, and you showed some of those stocks there. First, TSMC, the world's biggest chip maker. This is a company that has committed nearly $200 billion into the U.S., including cutting-edge chip factories. So it's likely they could mitigate this, and you're seeing in Taiwan a big jump in shares there. Samsung has also pledged investment in the US, and Apple said overnight that Samsung will manufacture its image sensor for its upcoming products in the Texas factory as well. So that's another company the market thinks could avoid the tariffs. SK Hynix, meanwhile, which supplies NVIDIA with memory chips, announced plans for a nearly 4 billion chip packaging facility in the US, and NVIDIA said it plans to produce up to 500 billion of AI infrastructure in the US via manufacturing partnerships over the next 4 years. And you are seeing some of these stocks up because investors feel these are the kind of companies that have committed to the U.S. operations that may be exempt or may avoid some of the worst tariffs. If there is more chip plans or plants even built in the U.S., of course, this could help that long tail of chip suppliers in the supply chain, companies like ASML, for example. And that's my initial read right now based on what we know. But right now, of course, still little detail on the exact application of the tariffs, and it's hard to gauge what products exactly will be affected, Dom.
You're right.
By the way, you know what? Jensen Huang, he also came on Mad Money and said he had the deal. And people didn't believe him.
No, he was there yesterday at the White House as well. Obviously,
he hangs out at the White House.
He just seems to be there. He pops up, kind of like Musk used to just pop up everywhere now.
Well, I wouldn't equate the two. That sounds like you're equating them.
I'm not equating them.
That's good. They're different.
Meantime, I want to start with NVIDIA. Closer look, because President Trump met with CEO Jensen Huang. What was that about?
Tariffs, specifically tariff exemptions. Trump slapping 100% tariff on imported semiconductors, but not for companies that invest or plan to invest, commit to invest here in the U.S. So, I mean, if you look at the optics of this and what came out of it, at the White House yesterday, Trump met with the head of a $4+ trillion company, NVIDIA, Jensen Huang, their CEO, and then he met with Apple, $3 trillion company, their CEO, Tim Cook. Together, those two companies have committed over $1 trillion in investments in the U.S. Just two companies, of course, our biggest, but that's a lot of money.
A lot of money.
Firepower.
Love it. A lot of money.
Love it. It's a lot of money. It's coming into this country. These are the leaders, and we also lead in the world.
Following President Trump's announcement that he would exempt companies from his proposed semiconductor tariffs if they committed to producing their chips in the United States, chip stocks surged pre-market on Friday. During a press conference held at the Oval Office on Wednesday afternoon, Trump declared that he would impose a tariff of almost 100% on processors and semiconductors. However, there is no fee if you are building in the United States of America. There is no charge if you have committed to building or are currently building, as many people are. After rising 2.5% Thursday to a new intraday high of 183.88, leading AI chipmaker NVIDIA paired gains, closing the trading session down less than 1%. The company then increased 0.6% pre-market, while Micron stocks increased by a slim 0.7%. Rival Advanced Micro Devices shares increased by 2%. Leading contract chip producer TSMC produces the majority of the world's cutting-edge chips in Taiwan, but it is free from Trump's tariffs since it has been investing $165 billion to expand its capacity in Arizona. Shares of the corporation registered in the U.S. increased by about 5% on Thursday. In an attempt to escape Trump's wrath over the trade war, IT giants have hurried to announce investments in their U.S. manufacturing footprint. NVIDIA has so far pledged to build $500 billion worth of AI infrastructure in the United States. Micron committed $200 billion as well. According to Texas Instruments, the company is investing $60 billion to increase its U.S. manufacturing capacity. According to Christopher Danley, a Citi analyst, the exemptions indicate that the semiconductor duty will not have a significant effect. Since U.S.-based semiconductor companies with its own factories operate in the U.S., Fabless companies can commit to employing US-based companies like TSMC, Samsung, and GFS. In an attempt to escape Trump's wrath over the trade war, IT giants have hurried to announce investments in their US manufacturing footprint. NVIDIA has so far pledged to build $500 billion worth of AI infrastructure in the United States. Micron committed $200 billion as well. According to Texas Instruments, the company is investing $60 billion to increase its U.S. manufacturing capacity. However, it is difficult to predict the impact of the tariffs due to uncertainties surrounding their implementation, according to Bernstein analyst Stacy Rasgon. The U.S. does not import a ton of raw chips, $45 billion worth in 2024, and it's unclear if levies would only apply to raw semiconductors or also to things that incorporate them, he added, adding that the majority of semiconductors are imported once they're already inside other products. Yahoo Finance's request for comment was not immediately answered by the U.S. Department of Commerce. When the agency releases the results of an investigation, it began in April into U.S. semiconductor imports under Section 232 of the Trade Expansion Act, which gives the president the authority to impose restrictions on imports of national security-related goods. Further information regarding the tariffs will become public. Rasgon stated, "At this time, we do not know exactly how the new rules will be implemented once they go into effect, because Trump's public statements frequently lack nuance and detail. When the real findings of the 232 probe are out, we should have additional information. So what implications does this have for NVIDIA's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now, let's get back to the video. If AGI is introduced by 2030, NVIDIA's share price might double from its current level to $375, making it a $9 trillion firm. Digital beings and synthetic research are examples of hidden growth vectors that represent trillions in computing demand that Wall Street hasn't factored in. Although alternate approaches are being constructed, the company's 15-year CUDA ecosystem provides a powerful toll road. When seen through the prism of traditional semiconductors, NVIDIA appears costly at 40 times forward profits. However, if artificial general intelligence (AGI) becomes a reality by 2030, as OpenAI, Anthropic, and other laboratories privately anticipate, that framework falls apart. NVIDIA will do more than just provide AI infrastructure. Every intellectual operation on the world might suffer as a result. Consider it the intelligence toll, a cost every cycle for each AI agent operating in every industry, each simulated experiment, and each autonomous choice. NVIDIA becomes the billing system for intelligence itself when computing becomes as necessary as energy. Skeptics underestimate how easy the math is. In the fiscal year 2025, NVIDIA's revenue more than doubled to $130.5 billion. By fiscal 2027, Wall Street already projects $254 billion. However, that is only the start. If AGI revolutionizes all industries, the actual explosion might occur. With a 19% compound growth rate between 2027 and 2035, you can reach $1 trillion in revenue. That's a $9 trillion market value at a 45% net margin and an earnings multiple of 20, which is appropriate for vital infrastructure. That is equivalent to $360 per share, which is double what it is now, with 24.39 billion shares outstanding. Is it a bull case? NVIDIA's stock may rise to $615 if it wins half of the $5 trillion AGI computing market. Doubling your money as a business expands from $4 trillion to $9 trillion is hardly settling, but it's not the 20x return some people envision. Fantasy? Microsoft pledged $100 billion for data centers that use AI. For sovereign computing, Saudi Arabia, the United Arab Emirates, and Japan committed $90 billion. NVIDIA hardware costs $7 billion a year for OpenAI alone. Chatbots are not the smart money's bet. In the AGI economy, it is prepaying for infrastructure. The arrival of AGI by 2030 is the key question that hovers over the entire investment case. The difference between owning stock that simply increases in value along with the semiconductor sector and one that doubles as it becomes the first $9 trillion corporation in history is the answer to this question. Because existing models solely include the present, GPU sales for AI training, this gap persists. They don't account for the explosion that occurs when artificial intelligence takes over as the driving force behind all industries. Imagine businesses deploying millions of self-governing AI workers, pharmaceutical corporations modeling every potential drug combination, and billions of people embracing their own AI companions. The initial indications are already present. Although Salesforce claims that over 8,000 clients are currently utilizing its AI agents, the infrastructure needed to support this future will outstrip the industry as it stands today. The moat of CUDA. It took some time for NVIDIA to establish a competitive advantage. Its Compute Unified Device Architecture, CUDA software, is the natural language of artificial intelligence, having been developed over 15 years by a team of 2 million developers. A multi-billion-dollar tax, $100 million for a GPT-4 class model, years of code migration, and significant performance penalties are the costs associated with leaving this environment. The fact that even the wealthiest tech companies in the world continue to purchase NVIDIA's GPUs after investing billions to create their own chips serves as evidence. Paying the toll is Alphabet. The toll is paid by Tesla. All of the major competitors in the race to AGI, including OpenAI, Anthropic, and xAI, have sided with NVIDIA because of this potent lock-in. They are selecting the only stack that has been proven to work, not just a vendor. However, even the most resilient stronghold may have weaknesses. The specialized task of AI training is where the moat is deepest. Competing armies from cloud giants and advanced micro devices are assembling at the gates of the high-volume world of AI inference, creating alternate paths that avoid the CUDA toll. Indeed, an invasion of Taiwan might destroy 70% of the stock. Margin compression may occur with custom application-specific integrated circuits, ASICs. AGI might be late. The true calculation, however, is that NVIDIA is doing more than simply riding the AI cycle. It's setting up the framework for AGI. Early investors will regret they didn't purchase semiconductor stock when every business needs AI like they do electricity, when neural networks are used to make every decision and when intelligence turns into a utility. They purchased 21st century cognitive infrastructure. New highs are in store for NVIDIA's stock. Thank you, Tesla and OpenAI. Early on Friday, NVIDIA was rising as it attempts to hit yet another record high. Its ascent appears to be sustained by a new artificial intelligence model from OpenAI and possibly more expenditure from Tesla. At $181.90, NVIDIA's stock was up 0.6% in pre-market trade. The stock reached a record closing level on Thursday after rising 0.8%. Relief over broad exclusions to President Donald Trump's proposed 100% chip tariff has bolstered the company, suggesting that there aren't many barriers to significant investment in AI technology. The most recent development is that OpenAI released GPT-5, the newest model that powers the well-known ChatGPT, on Thursday. In a social media post, OpenAI CEO Sam Altman listed NVIDIA as one of the technology's major partners, the only pure-play semiconductor vendor to be featured. Additionally, Tesla may be planning to give NVIDIA more money as it reduces its internal processor lineup. According to Bloomberg, which cited people familiar with the situation, the electric vehicle manufacturer is reducing its Dojo supercomputing team and related in-house AI training chips in favor of relying more on NVIDIA and advanced micro devices technology. Elon Musk, the CEO of Tesla, stated late Thursday on the social media platform X that it is not logical for the company to split its resources and scale two very distinct AI chip architectures. Musk stated that instead of training, where NVIDIA's hardware dominates, Tesla will concentrate on its AI5 and AI6 chips, which are experts in inference, producing output from AI models. Early on Friday, a request for comment from Tesla was not immediately answered. In pre-market trading, Broadcom was up 0.9%, and Advanced Micro Devices was up 2%, among other chip manufacturers. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
100% tariffs on chips. Except, and that's the most important word of the day, if you look at the activity in the chip stocks, the carve-outs for the companies that are announcing the foundries that they've already announced to build their stuff here. Why do you think NVIDIA is at a record high today? Why is Broadcom up? Why is Micron up? Why is Taiwan Semi up? Why is AMD up? Why? Because the market likes the carve-outs, and so does B of A, as they talk about the impact of tariffs not being as bad. Less than meets the eye, they say. It removes the overhang. From a high level, the 100% headline number seems intimidating, but in practice, we expect a much lower impact as major foundries such as Taiwan Semi, Samsung, Intel, and major other companies have committed to building significant U.S. manufacturing footprints here. NVIDIA's target goes to 200 today by Goldman Sachs. That's part of the story, too. Bark, different from bite. Bark different from bite.
You've got guys like NVIDIA who are they're fabulous, but they're investing a lot of money here in other things, which is a positive. My fabulous companies that are reliant on TSMC, they can go at TSMC Arizona, and there's a certain read of Trump's statements that suggest that maybe they'd still be okay to use it in Taiwan.
Sure.
I mean, we don't know yet. And then the semi-caps, if we have to actually build more capacity here in the U.S. at the margin, that's probably good for the U.S. semi-caps as well.
All right.
Let's get to how we're going to make some money in this environment, though. Yeah. So the themes right now, AI, computer, that's still the main thing?
I still think that's the main thing. One, we have what's happening with Trump with the tariff exemptions. That's huge. That is a huge cash portion into those companies because we can navigate that now. And if you can navigate that, businesses can plan, which means still early on in the AI phases. And we see that with margin expansions. This is where margins are expanding, is within technology. It's also happening within financials.
Just get your take on NVIDIA, too, which hit a new high today. You feel okay about where tariffs appear to be? That the worst of the talk is not nearly as going to be as the bite's not going to be nearly as bad?
I mean, for today, right, there's still no agreement with China, right? It's like they're going to kick the can, I believe, another 90 days. As it stands right now, we'll say NVIDIA and Apple are exempt. NVIDIA's numbers are going to come out, I think, the 27th or 28th. The stock's done really well running into earnings, so will it move much higher? I'm not sure, but it's just so nice to see this stock finally break above that 150 that it had been in for well over a year.
Yeah, big uptrend, obviously, that it's been in. Bryn, thanks. Bryn Talkington.
You look at the way the market has been rewarding companies that have gone all out on AI spending. Mike.
Yeah, Morgan, we're still for now, until further notice, in the kind of everybody wins phase of the AI boom, where you have Microsoft, Meta, NVIDIA, right? They're on either side of the AI build-out. They're all up, between 23 and 35% year to date. The S&P 500 is up less than 8% on a year-to-date basis. Looks like a pretty similar cadence, too, right? Everyone's saying if you're leading in AI in whatever fashion, we're willing to capitalize you pretty generously. Now, look at what's going on with the valuations based on free cash flow. Now, the thing about the big cloud platform companies and social platform companies like Meta, Microsoft, Amazon, is you always were able to say, well, they have access to massive free cash flow. It's a low capital intensity business. Not anymore. So this is the free cash flow yield. It's how much free cash flow divided by the equity market cap of the companies. And you see Microsoft and Meta now down below 2%. That means the stocks are trading at more than 50 times this coming year's free cash flow. This is a 12-month forward measure, whereas NVIDIA, which is collecting all the money from these companies, now has a good deal higher free cash flow yield. It's up near 3%. So not necessarily high, but definitely a beneficiary on a net basis. So implicitly, the market is saying that they believe all this spending is just going to be enlarging the pie, making everything more productive. It's not going to be redundant. It's not going to result in overcapacity anytime soon. So we'll see how long we can stay on that track in this market.
Okay. What's interesting to me is the fact that you have seen the sell-off in some of the AI infrastructure winners as of late. So maybe some of those beneficiaries that aren't the big tech companies themselves, but in terms of some of the dollars we've seen spent.
Well, yes, I do think that there are some companies that were maybe either late to it or they're not exactly at the center of the action. I mean, whether it's Supermicro, for example, that did have a tough week, or some of the industrial plays that are building out some of the electrical infrastructure. They haven't necessarily kind of gotten washed out, but they've had a little bit of a setback in terms of, maybe they got ahead of themselves valuation-wise.
So the other thing I'll just say is, it seems really hypocritical, right? If you're talking about ties to China and that sort of thing, well, Jensen Huang has ties to China. I mean, Jensen Huang sells a lot, and this is NVIDIA, obviously, sells a lot of chips into China. They just got, and you could say, well, if Tim Apple, played the, if Tim Cook played the president pretty well, well, no one's done it better than Jensen Huang, right? And they're selling billions and billions of dollars of chips into China that are going to make it into their defense and intelligence apparatus. And I do not believe that he has the national interest of the United States, but he definitely has the fiduciary responsibility to his shareholders. And that's one of the reasons why he's gone to Mar-a-Lago. He's gone to the White House, and he's done these sorts of deals to get the export